Hello everybody, it's Nick McDonald here from Trade with Precision. Thanks for watching this week's ice commentary videos. Looking here at the Russell 2000, and we've kind of had a bit of a slow week. So where we were last week, we're coming down here, we're approaching 780. In fact, so we're on this red candle here, and we said anything below 780 will be bearish, and as long as we hold above it, we remain bullish. And as you can see, we've tested 780 almost every day this week, and a couple of times just dipped below it. Particularly on Monday, we dipped below it and rejected it completely. Dipped below slightly on Tuesday and Wednesday, and Thursday and Friday just managed to hover above that level. So 780 really just proving just how significant resistance that is, and still, as we said last week, remaining bullish as long as we're above it, but actually now starting to look even more bearish if we do dip below it. So let me take you through them. That's the situation on the daily chart, and it's certainly forming some support down here, which short traders would be looking for a break of. So the typical short trade here would be short on a breakdown through 780 with a stop up above these highs. The question is, of course, what do we consider a break below 780, because we've been getting these little dips below. Most I'd say would be looking at the lows of these two candles here. We've got 77860 and 77860 again. So 77850 would be a breakdown through the low of the last 4 days, and would be quite considerable probability in the favor of a move down more towards 750 if that happened. Let's look at the higher time frames and see how they line up. So looking here at the weekly, what we do now have, here was our previous low marked in, and it was showing the resistance, the support that had formed. What we do now have quite clearly is this lower high, and we've just nudged down to lower lows. Now we haven't really continued down from there yet, but what we do have is a classic type pattern where the market was making higher highs and higher lows, has changed to lower highs and lower lows. Some people call this a head and shoulders pattern, shoulder, head, shoulder. We choose to just call it what it actually is that is happening, and that is a change of trend. It won't always look like that head and shoulders pattern, but that happens to be what is on the screen there. In fact, you can see a similar example happen back here where we came up, we were making higher highs and higher lows, and we turned around here, we made a lower high, broke down to lower low, and we did have a considerable move down there. So it's looking like that is potentially on the cards, and that is why also 780, this level here, is so key, because below 780 we are now confirming the lower low. At the moment, we could just have had a little bit of a false break because we've broken down and rejected that low. But as long as we break down through and hold it, then it is starting to look more bearish. As long as we hold above it, it does still look bullish, but we're only hanging in there by a thread at the moment. Coming and looking at the monthly chart, this is bearish in terms of this candle here, and now broken down through the low of that candle. It is starting to look like we could pull back a little bit further. On this time frame, looking like even 720, while on the daily chart we'd find some support at 750. On the monthly chart, it could go as far as 720 and then down beyond to about 700 before we found much support at all. So the thing is that these pullbacks, what I'd like to remind you is that after a good move up, like we had back here, we get a good pullback. And after a good move up, we get a good pullback. And all we've had here is another good pull up, and we're in the middle of a pullback. And it could be a much more decent one than what we've got, i.e. it could pull back to 720 quite comfortably. So it's normal for this to happen, and the press start to talk about it like it's really bad. It's not, it's normal. Let's just come and have a look at a few of the other things that are going on here, just to see, are we likely to pull back further or are we not? Well, last week the Dow was kind of the shining light and was actually holding up above the others, but now even the Dow and the daily chart have started to make some lower lows. The trend is still very uncertain because we made higher highs up through here, even break these highs, but then now we've come down and made lower lows in the previous. So we've just gone into a period of no clear trend there on the Dow. The weekly still ever so slightly in an uptrend, but like the Russell, it has a real key point down here where if it breaks down through all of the support, and 12,700 being the key level, if it breaks down through that, it's now moving into what would be a trend reversal, starting to look like it could pull back. And then coming and looking at the monthly chart, a sensible pullback would be back even as far as 12,000. And this would be just quite a nice healthy pullback, to be honest. If we look at this move up, that would be around about a 50% pullback into this old support level through here, into the big number of 12,000. And looking reasonable, and actually the uptrend would still remain intact easily, and the Dow would still look very bullish, even pulling back to 12,000 or even a little bit beyond. So it will actually be not a bad thing at all for the markets if that happens, and the Dow is starting to look a little bit more like it will. Coming and looking at the S&P here, S&P very similar to Dow, it's at its key level now. If we come and look at it on a higher time frame, it pulled back, back into maybe around about anywhere from 12,000, which is quite a big pullback, to more like even 13,000, which is a bit more shallow. Both very reasonable, and 13,000 would just get us back into these averages. Just a nice, small, healthy pullback before pushing on again. So starting to look more and more likely across these time frames as we also look here at the weekly chart on the S&P that we have made a lower high here and a lower low, just more and more looking like we're moving into this bigger pullback going on. Lastly, come and have a look at the Nasdaq, because this could buck the trend slightly. We've had a bit bigger pullback already, and what is really bullish here on the Nasdaq on the weekly chart is we've had a pullback right into the averages, and we've got this nice small bullish candle. What this sets us up for this week is if we break up through the high of this candle, that is starting to look very bullish. So we've pulled back in, we've got a bullish candle. A typical trade I often look for is a breakup through the high. If I were to actually trade this, it would be a stop below the low, looking for a one-to-one target initially. But this looks like if it does break up through the high of the week before breaking the low of the week, it does look bullish and it should run higher, at least to the size of that candle itself, upwards and probably even pushing up to 2,800. So we have to watch that this week and see, does the high of last week get broken? If it does, then that would be strong. If the low gets broken first, then it will be looking bearish and still looking like pulling back further. And looking at the Nasdaq, it's really about 2420 back into these old highs where a sensible pullback would be. Looking at the monthly chart, that looks quite reasonable too, because we do need on the monthly chart a bit of a bigger pullback, just to pull back into these old highs, pull back into the moving averages before pushing on again. So coming back to the Russell, it's starting to look more and more like we're going through a bigger pullback. When that starts to happen, or even as it's starting to happen now, we start to see negative press about this is double dip recession, etc., etc., major market collapse. I've been reading a lot more of that in the last few weeks, and I tend to just skim the headlines, but I don't really buy into it. Has been a little bit of bad news with things like the JP Morgan loss, puts a few gets a few people worried about what's going on in the markets. We've still got fears of Greece, etc. So there is a few fears out there, and there is reasons for sell-offs, and there is reason for this to sell off a little bit further. So it's starting to look more and more like that, and the real key level being 780 here. There was a couple of other key levels we looked at on the S&P, the Dow, etc. If we start to break down through these levels, we are showing a short-term reversal, and we are likely to be coming down and pulling back into these lower levels. On the Russell, that looks to me like a sensible place to be pulling back would be around about 720, I think, based on the monthly chart is quite reasonable. But here, if we just come and look at it on a daily chart, we're going to find some support ahead of that around 750. But it certainly does look like we're going to move lower. All of this, though, depends on us breaking down through 780, and the Dow and S&P also breaking down through their key levels, as well as the Nasdaq breaking the lows of last week. And if that happens, we're starting to look like this is definitely confirming a bigger pullback. At the moment, though, in the very short term, we are hovering above those levels and just managing to hang in there. And if we can stay above those levels, we remain bullish. So I'm bullish for now, but I know the exact point where I turn to bearish, and that is a breakdown through these lows here of last week. And if we start to do that, the markets are looking like going for a bit of a bigger pullback while remaining bullish in the longer term, and therefore still remaining bullish over many months, but I'll turn bearish for the coming days and weeks until we see the markets get down to these support levels and we watch how it reacts as and when it gets there. Hope that's clear, everybody, and I hope it makes sense. Happy trading, have a fantastic week. Speak to you on next week's update.